that one of our entry trigger for making any trade entry is the use of candlestick pattern, and we are using two major type of candlestick pattern: the bullish engulfing candle, bearish engulfing, and then the pin bar, which is the hammer. So generally our entries are being triggered by candlesticks pattern and formation, and the candlestick pattern we are using is engulfing and a hammer, or what we regard to as a pin bar. But however, we can make a sniper entry using this candlestick pattern. In this lesson, I'll be showing you 3 ways you can make entry using this particular candlestick pattern. Yes, it is not all about just the candle closure, but there are other ways you can make entry trading this candlestick pattern. For instance, if we have an engulfing candle, this is a typical engulfing candlestick pattern, and if this happens to be this is a bearish candle, and this bearish candle happens to be engulfed by a bullish candle, as the case may be, so this is the bullish candle. So this particular candle is the bullish candle. Why do we call it engulfing? Because it covers completely the previous candle to the upside. So which means this is our buy signal. Immediately this candle close here, we make our buy entry. So the question is, how do we make a sniper entry in buying using our engulfing candlestick pattern? One of the way we can do it is for us to make the entry immediately after the close of the candle. That means immediately this bullish engulfing candle close, you will go in with your buy entry. Another way to do it is you wait for price to pull back 50% of this candle, of this bullish engulfing candle. Now, how do we get the 50% of it? You can pick up your Fibonacci tool and mark your engulfing candle. So that is it. So it is as simple as this. And from this particular event, you realize that this is 50% of it. So you can set your pending order to 50% of your Fibonacci tool. Now you might be wondering why the 50%. Now there are some price scenario whereby immediately price closes. What happened? You realize that price will not go up immediately but will retrace and give us 50% of this candlestick formation before price will eventually to pull back 50% before it will continue back to the upside. And another way, the third method of making entry using the engulfing candlestick pattern is for you to make your entry, your pending order will be below the previous bearish candle formation. It means that your order will be somewhere here. The question is why? There are times where price will return and then take liquidity from this downside before it will now continue to the upside. So these are basically 3 ways you can make entry trading this candlestick pattern formation. So the opposite of this is for a sell. That is, for a bearish engulfing candle, you are having a bullish candle, and then suddenly you have a bearish engulfing candle. So the same thing is applicable, that you can make your sell entry immediately after the close of the candle. You can sell, and at the same time we can fib 50% of our candle. So you can take 50% of it, you wait for price to pull back to 50%, and then you make your entry to the downside. So this is for bullish, and then for pin bar it is the same pattern. For a bearish pin bar, this is it. How do we do it? The same pattern. You either make your entry immediately at the close of the candle, you will sell, or you will wait for price to pull back 50% of this candle. Using your Fibonacci tool, you can get the 50% of this candle, and then you wait for price to pull back from here to 50% of it, then you make your entry to the downside. Or you set your pending order to the close of the candle, below the candle, which means your pending order will be here, and you are expecting price to pull back. Maybe there is a liquidity built up, then before it will continue to the upside. For a bullish pin bar, the opposite is the case. You get your pin bar, and then you wait for price to do its own thing this way. So your entry can either be at the close of this candle, you make your buy entry, or you are taking 50% of your candle. So depending on whatever way, this gives us sniper entry, trading each of this candlestick pattern. So this is 50%. You want to see price pull back to 50% before you make your entry. That is 50% of the pin bar. And another way is price can choose to make 100% retracement of the pin bar. Price will retrace all the way here before continuing to the upside. So having shown you this, let's move into the chart to see exactly how this scenario plays out. Of course, looking at this price scenario, this is boom 900, and boom 900 is in an uptrend. You can see how these patterns play out. This is the pattern. You can see this one. Immediately after we have this pin bar, you can see this pin bar, right? Immediately after we have this pin bar, you can see that if you should have bought after the close of this pin bar, you will be in profit immediately. This is a sniper entry. Now look at the scenario of this one. This particular pin bar that forms here. You realize that from the first pin bar, which is this bearish pin bar, you can see what happened on this bearish pin bar. The next pin bar that forms retraces more than 100%. taking away liquidity from that side. And why? Because this first pin bar, this pin bar here and this one build up a liquidity. There is a liquidity because they form a pattern like a double bottom. Perfect. This one and this one. So in that case, this has to come down to take away that liquidity before it closes as a pin bar. So if you were to trade this first one and this other one, automatically this one now would have taken you in a loss. But eventually, when you take this third one, see the price return more than 50% and then continue back to the upside. So this is exactly how these patterns work. It is so perfect and it works. Look at this scenario. This pin bar, if you were to take trade on that pin bar, you would have been in profit immediately. So depending on what suits you, you can decide or which of the way to be making your trade entry. Here is our engulfing candlestick pattern. Immediately at the close of the price pulled back a little, and you see how that plays out. Excellently well and straight forward entry in the direction of the trend. In this scenario, we are having a lower high, a lower low. Okay, here is our lower low, here is our lower high, this is not, and then you can see how price plays out after that retracement. Look at this engulfing candle. Immediately price continue in the direction of the trend. But there are other situations where you will see that price will pull back up to a certain percentage before it begins to play out. You can go through your chart, identify this pattern, and see how you can make entry trading this candlestick pattern. I believe you have learned something new. Thank you for watching, and do not forget to give this video a like. Please share, subscribe, turn on your notification bell so you'll be the first to get notified when we upload our next video. Thank you, and see you in the subsequent video.